So I just fucked up. The fucking video that I took earlier, just maybe less than 5 minutes earlier, sound was off. This wasn't turned on. So we need to fucking redo this shit again. Okay, no problem. So this was my position for today. This is October 17. We got one position, bullish position, long position, October 17. Currently 11:25. So as I woke up, I saw this large bearish movement that engulfed this 1 hour candle. It's another 1 hour candle, and as I woke up, this was already happening. It's consolidated. Then it already created a 5 minute high right here. So I know that this was already going to reverse. So to add on that confluence, I check on the 1 hour time frame and check if it hit below the low. So it didn't really hit below the low. So I'm not sure if that's a liquidity sweep. Maybe not. So what just happened was price dipped down into the 5 minute order block of this 1 hour low. As you can see, price rallied higher. So we took this position, this long position, once this candle closes. Once this candle closed, entry, this is front test, so I didn't really execute this trade. I actually did on this time. Obviously, we got stopped out instantly almost. So yeah, we took this long position. Our bias, our confluences was all-time high, bearish movement, then change of character from this order block. We got a 5 minute high right here. We got this fair value gap right here, and as this candle closed, which was a break of structure, this was also an inversion fair value gap. So we took this long position, stop loss below this 5 minute order block of the 1 hour low. Then we aim for 1:4 RR. As you can see, this trade was greedy. We aim for 4,500. And our stop loss was massive. What does that mean? That means this was only $50, or what is 1%, less than 1%. So I think the lesson here is having a tighter stop loss. How can we do that? We need to backtest if this is a reliable entry. So when there's a bearish movement that engulfs even over or halfway of a 1 hour low, we should look. We should have an alarm setup. For example, let's set up an alarm right here. Set up an alarm right here. And once that alarm got ticked for the bearish movement, we could check if it's going for liquidity below the 1 hour low or for the order block only. So with that, we could, oh, actually, I just realized. Initially, I was thinking like this. So if this happens, or when a bearish large movement happen, I could set up a buy order from this halfway, or like 75% of the order block. But for example, if this happens, if price dip below the order block, we'd be cooked, because our stop loss would just be below that order block, and we're gonna be stopped out before the movement. So buy order is not an option unless we test this a few times. So with that, yeah, that was my initial lesson one, which was a tight entry from an order block of a 5 minute 1 hour low. And also this guy. This seems pretty reliable according to Roger, the mentor. With this position, you would only have his stop loss below this inversion fair value gap. And with that, our position would have been 1:9. I already did this earlier, so I know. So we took this trade from this candle close and set our stop loss just below this inversion fair value gap and set or take profit above this guy. This would be 1:8, even 1:9, 1:13. Yeah, so that's one thing that we could look into. We should test that out. The inversion fair value gap entry after a break of structure. Since bullish, since after observing my trades, after knowing my trades that I've been doing, I always have the initial bias correct, but then price reverses and hits my stop loss. So a tighter stop loss would allow us for a better RR, and that's why we need to test things out. Test if an order block of a 5-minute order block of a 1 hour low is reliable and it wouldn't hit that liquidity below that 1 hour low. If inversion fair value gap after a break of structure is reliable for a long position after a large bearish movement from my all-time high. Yeah, that's it. Because we already are getting better at looking at this or pattern recognition with this price action. Even, for example, here I saw this fair value gap. This candle was here 30 seconds before this 5-minute candle closes. Then it went upwards abruptly. So it didn't close as an inversion fair value gap. Additionally, even if we're going on an uptrend, an inversion fair value gap, I think, would not be really a continuation confluence, because based from the recent TGR video that I've watched, excuse me, an inversion fair value gap is not really a continuation confluence. It could be a confirmation confluence like this guy, which could be a point of entry, but a continuation confluence, I'm not sure. So here, as we saw this. I would just put this because this candle was going lower before this closes upwards. So we have this bearish order block from the 1-minute or even 5-minute. Then I mark out this inversion fair value gap, and we did have a lower high. So those were signals that we are having a change of character, in which we did. I was correct on this one. I said that price would dip down before this order block and would maybe rally higher considering this break of structure happening. So yeah, those are 2 lessons that we could talk into. We should backtest if an order block of a 5-minute order block of a 1 hour low is reliable from an all-time high bearish movement, and if a buy order of that is reliable, or it'd be better if we just entry it ourselves. Additionally, test out if an inversion fair value gap, because an inversion fair value gap can be tight like this. So if this is a reliable point of entry, or would we just get wicked out, then that would hit our TP because our bias was correct. So right now, we have a large bearish movement on gold, not gonna lie. As you see, this 4-hour, 12-hour movement, 1, 2, 3, 12 hours of bearish movement on gold. That hasn't happened for a long time with those large volumes, not gonna lie. Last time it happened was in August, before the large rally upwards from August 29. See? So we could keep that in mind for next week's trading. I'm not even sure if I would buy a funded account next week because I have a lot on my agenda. Yeah, that's it. To be honest, it's just a 1 daily candle. A bearish 1 daily candle, which already happened before. But not that large of a bearish candle. So maybe this is just a pullback or a big retracement, because this is gold we're talking about. Gold has been going higher and higher, considering the fear in the market, crypto and other things. Yeah, so those were the position. We got a long position. we have a right bias, we have a correct bias, but our entry, our RR, our position, trade position was not good. We could learn from this by maybe having a smaller stop loss, either from this order block right here, from a buy order, or from an inversion fair value gap. I think an inversion fair value gap after a break of structure would be safer, but this guy we could test it out because what I fear was we get wicked because our stop loss will be just below that order block. So yeah, that's the video. It's currently 11:36. I'm gonna get to wind down and just post this video. This is journal number 2. I'm just posting this because I don't want to write my journals. Not gonna lie. I don't want to write my journals. It's better for me to. I'd even go back to this and watch this again. Not to be honest. Maybe we could summarize this video on the description or even in Notion or somewhere. But yeah, those are the lessons. Tighter stop loss, better positioning, because we already have correct biases. And backtest if this IFVG is reliable, if order block of a 1 hour low is reliable. Yeah, that's it. Thanks guys for watching. I don't know if someone's watching, but I'm just posting it for myself. Good night.